All right, thank you very much, Michael. In the meantime, to review how the commodities market performed in February, including factors that might have affected the market, as well as discuss the outlook for March and the potential market forces that will affect the market, Akinyinka Akintunde, Vice President, Financial Markets at AFEX, joins us now. Good morning.
Hi, good morning.
So the Nigerian investment, you're welcome. The Nigerian investment environment, of course, is currently characterized by a not so good yield environment in the fixed income space and a bearish stock market. How is the commodity market faring amid current market rout?
I thank you for that. I think the commodities market is quite unique in the nature of its in its nature by default, right? Partly because, firstly, if you look at the commodities ecosystem, it's seasonal, right? So it brings with it a natural reset in prices, right? Which allows market players to price in necessary expectations on the macroeconomic outlook, inflation position, and all those into the commodities prices. Now, we've seen a lot of participation by market players in the commodities ecosystem. Firstly, because, as you all know, agriculture is one of the key drivers of GDP in the country, so you expect to see much more investment there. However, we've seen little financing by players or from commercial players in the sector over the recent years. So there's need to also bring in more players there, which is why more players coming in will also affect the dynamics of pricing there. The other key part of it is because the commodities, as we have it right now, are very, very integral to the livelihood of Nigerians, right? So you see the smallholder farmers that are cultivating bulk of these commodities solely depend on their livelihood solely depends on these commodities. As such, it's expected that activities will always be increasing in this sector. On the other side, you'll see that the seasonal nature of these commodities makes it susceptible to potential astronomical prices over the course of the season. So, for example, at harvest during November, December, you'll see prices at their lowest. Then over the course of the year or over the course of the season before the next harvest, you'll see prices going up until they get to their peak. Now, this is a natural occurrence of the commodities ecosystem, which is not obtainable in the equities and fixed income markets, which are more driven by sentiments of investors in terms of their perception of the firms that they are invested in or the performance of the instruments they are investing in. Overall, I think the commodities ecosystem offers more a complementary asset class that helps investors in the capital market have a balanced view or a balanced portfolio that ensures that the volatility in the markets is well cushioned and gives them a fair return for that risk they are taking on board.
Well, thank you so much. Well, when Michael was doing the review, he talked about the ACI and the AIE. So what factors would you say are responsible for the positive performances that are recorded in the ACI and the AIE in the month of February?
Naturally, or typically in the month of February, annually, you see higher increases in price of these commodities. This is due to the fact that most consumers of these commodities already stockpiled earlier in the season, November, December, and right now they are restocking or they are repurchasing assets that they need for their production activities, which is why they will be in this market and price of these commodities are likely to go up. And this is typical for local commodities. On the international space, the dynamics is similar but much more predictable because most of the players in that sector already have positions on international exchanges, which they are fulfilling the contract by buying locally and fulfilling the contracts they have internationally. Now, this balance is always what we see at this point in the year because a lot of players are going into the market and buying up these commodities. And the trend is always by March, April, you will now see a decline because more farmers are coming into the market to sell their commodities. And when they sell their commodities in preparation for a new planting season, you will now see these prices going down. So yes, the ACI and AEI recorded impressive performance in the month of February. It may not be sustained in the near run. We'll see it moderating in the next month before it picks up again by April, May.
One before I let you go, what are the major infrastructure gaps in the commodities market and how is AFEX bridging these gaps? A quick one.
Infrastructural gap is one of the issues that is limiting the potential of the commodities ecosystem and the agricultural ecosystem as a whole. So, for example, absence of storage infrastructure. We keep saying this, but it's not receiving the much deserved attention. So there's a term we use at FX which we call the absorptive capacity of our storage facilities, which basically speaks to the total capacity you have as a nation compared with the value of or the volume of commodities you produce internally. Now, if you do a comparative study with South Africa close to us here and the US, you'll see an 85%, 95% respectively in terms of storage absorptive capacity. But when you come to Nigeria, you'll see this value below 1%, meaning we don't even have enough infrastructure to cater for what we're producing. And this has a lot of ripple effects from a lot of food losses at harvest to the fact that we are not food secured yet as a country. We don't have a full year stock that could cater for us in case of any external exigencies. This is a huge infrastructure gap that needs to receive more attention. On the other side, we see more gap also in the technology space, right? Pricing of commodities, a stable system that ensures that there's transparency in pricing these commodities across the nation. And these are all infrastructure that AFEX is putting its weight behind to see how, as a country, we can develop a system that consistently provides a transparent and investable market that investors can come in to develop. I spoke about storage earlier. In developing this, you don't necessarily need the government to be the one to do it, but when you create an environment in which investors could come in through the other asset classes to develop it, then you see an increase in the availability of these storage spaces that drives the local capacity for us to produce more and then be more food secured as a country.
All right, thank you very much, Akinka Akitunde, Vice President Financial Markets at AFEX. We'll take a moment.